The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off on Tuesday, where the sentiment has been negative prices coming at you. We get the S&Ps negative by 31 points to kick things off. We got about 24 minutes to go until the start of trading, and you have the S&Ps right now 66.60 as we speak. Lows overnight, 66.35. You see the acceleration yesterday. Markets in the red. We got a little bit of internet problems with Cloudflare. The company blaming unusual spike in traffic before outage errors. Well, isn't that what they're supposed to handle technically? Doesn't mean much. Unusual spike in traffic. Nonetheless, it's hitting many sites. It's hitting X.com. It's hitting New Jersey Transit, ChatGPT, and the likes. Many equities. Yeah, New Jersey Transit. How about that? You show up for that transit ride. Not happening this morning. And yeah, so you're going to see that. They're saying it's recovering, but we'll find out. We'll see what happens. And a few sites on the internet today, and not just sites, right? New Jersey Transit. We'll see. We take a look at the volume in this market. All right, S&Ps. Now, slightly lighter volume yesterday than the prior 2 days. But man, we got strong volume on a 3-day sell-off. Okay, that's the way I look at it. The way I look at this market right now, you did have a bounce on that bounce November 7th. But you're breaking through that level, and you're coming into the acceleration on October 10th, okay? Now, that acceleration on October 10th, remember, was the worries of the new tariffs getting put in place, 100% Chinese tariffs. That abated. We sell off again. You pop, and here we go. We're breaking the lows. We broke them overnight, okay? In terms of the lows of November 7th, you did just over 2 million contracts on the S&Ps that day, and we're doing 2 million, 2 million, and yesterday was 1.8. So a little bit lighter yesterday, but on an overall basis, okay, you take a look at the weekly, you got strong selling on the last few weeks, and it's going to be this week as well. Wherever we end up, it's going to be a big week of volume. Now you take a look at the daily again. That is quite a nice bounce, okay? But we're challenging that volume level on the way down, and it's going to be interesting to see if we keep pushing lower, how we come into these lows when you did about 2.5 million. Very difficult to challenge the volume that we did on a tariff volatility spike like that. But guess what? We got a lot going on today, folks. We got a little bit of a sell-off to kick things off. We got some internet problems to kick things off as well. And yeah, let's talk about it. So, New Jersey Transit, ChatGPT and all. Now, Cloudflare, yeah, they're negative, as you may expect. They're seeing services recover, as they say, okay? But this site is used by hundreds of thousands of companies globally. It acts as a buffer between their websites and end users and working to protect their sites from attacks that might overload them with traffic. So imagine, that's their goal, and they're saying that they got too much traffic. Isn't the goal that you protect the sites if they get too much traffic? Well, they got too much traffic, so the sites came down. We'll see what happens. Nonetheless, we have some problems in the market this morning. Now, you talk about the economy. We're looking for data when we've had a little bit of a blackout. And yeah, U.S. companies shed about 2,500 jobs as October drew to a close. And this is ADP. That's ADP. So the decline suggests the labor market lost momentum late last month. We had Waller calling for cuts yesterday. We jump over to yields today. How's that for you? Higher price, lower yields, coming at you, 4.09. We're losing jobs. The market's having a problem. Mr. Waller thinks we should cut. And we have lower yield, 4.09. You take a look at the daily on yields, and yeah, pushing that level yet again. 112.31 up by 10 ticks. We jump over the dollar this morning. DXY, $99.47. We jump over to the gold contract. Dollar a little bit weak on lower yield. And gold catches a little bit of a bounce off the lows, but we just hit $39.97, folks. You talk about volatility, man. Gold's $75 off the lows, folks, and all we are is break even on the session. Okay, the two-way swings in this market alone should give you the idea that there is a difficulty in pricing the market right now when you're getting swings of $250 down, right? Almost $100 up. There's a lot of volatility in this market right now. Yeah, jump over to the home builders. We got Home Depot with their numbers. And yeah, you're going to be down by, what is it, $16 on the open for Home Depot. You jump over to Lowe's. Down about $8 on the Home Depot numbers right now. We jump around the Magnificent Seven. Amazon shares down $5 to $227. You're below yesterday's lows. Microsoft shares going to be down, look at that, $10. NVIDIA with their earnings coming up this week, down another $2 to $3 on the pre-market right now. Tesla slightly in the red. We jump around to some of the other chip stocks. AMD down about $4. Broadcom, there you go. Broadcom in the green shakes it off from $335 to $344. You jump over to Oracle shares, $215.81, down about $4. So let's talk a little crypto. Bitcoin below 90,000 for the first time in 7 months. Now, listen, crypto needed a pullback. Okay, there's 89,000 in the overnight session. You take a look at the daily, quite a slide. We just lost 37,000 off the top of that number from 127 to 90. You got a little bit of a bounce there. And in terms of the move we're doing, we zoom in on the recent action on Bitcoin. Take the high, which was only in October. And where this bounce goes, you could call it this one maybe. Oops, we are extending past the 1-to-1. That was going to be the point. Get that nice acceleration, and boom, we're blowing past it. Now that bounce that we just got, okay, right at the 50% mark in terms of the lows of October 17th. You bounce up to October 27th, and we are now past the 1-to-1 expansion of that A to B, C to D. And I bring it up especially because look how you blew past the B point, right? October 17th was the low of about 103,000. You blow past that November 4th with big volume, okay? You do it with volume. You blow past that with volume. You come back, you test that area on lighter volume, and boom, you accelerate lower. Now on a bigger picture, technically, you're back into where we were January 3rd, 13th, the week of. And the tough part about this is we're in the middle of just basically a 1 to 2 week expansion following the election. That's what we're coming into right now. We've given back all the gains of the last year in crypto. Think about what's happened in the last year in crypto. Well, guess what, folks? That got priced in 2 weeks when President Trump won. 2 weeks. You traded from 68,000 up to 91,000 and change, a high of 94,000 that week, November 11th, 2024. And here we are, November 18th, 2025. We're coming back, folks. Stay tuned.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We get the S&Ps off by 30 right now. NASDAQ 100 off by 137. And you take a look at Home Depot. Longer term, we've been chopping around. Right? Home Depot up to 439. You get to a high of 426 only a couple months ago. And just like that, we're pushing almost 20% off that price level. We're going to open at 340. Okay, so you're going to be coming right into the April lows. Amazing when you think about what has changed in the general market, and here we are with Home Depot at those April lows. Longer term, it's been quite a ramp to higher prices. Hey, I mean, you could just draw a line in terms of hugging that line. And there we are on the bottom portion of that line, that trend line 358, but guess what? We're going to open at about 340. Okay, and as I mentioned, you got lows, but getting into Home Depot, weak demand for big ticket items. Yeah, they cut their full-year earnings guidance, warning that some unsteady consumers are hitting the pause button on big-ticket home purchases. They expect adjusted earnings per share to decline 5% from a year ago, lower than the previous forecast. Profit and comp sales came in lower than expected. Weakness in the housing market, lack of storms that hampered demand in roofing, generators, and other categories. Check that out, right? There were no storms this year in Florida, man. I mean, I say that as somebody that maybe they were, in Tampa. There wasn't even a close call on the west side at all. We were pretty fortunate that we didn't deal with anything. It's always a little bit dicey as you get into late in the season, and we went through it in 2024 as well. So that's a real deal. But yeah, they got a weak forecast. And the housing market playing into that, of course, but interesting how everything comes in, all right? Many are taking on smaller projects like painting, sprucing up their gardens, but they're not redoing their kitchens, I guess. Hey, this is a deal that comes in interest rates as well. You know, people got a lot of equity in their houses right now, but it's very difficult to access that equity with the 10-year still well above 4%. You got mortgages at about 6% right now. Now, since I happen to put this on a chart, check out this line, okay? Didn't plan on even bringing it up, but I keep this on the chart for some perspective here, okay? That's the COVID pullback. I don't think that we're going back anywhere near it, all right? But the reason why I like talking about this, okay, is that this takes the low of the first time I have this on my chart. The S&P's 1983. You run it up to the peak of the dot-com bubble when you had the S&P's at 1,500. And if you said in the crash of 2008, 2009, right, man, wouldn't it be great if we could ever catch back up to that trend line? You say, are you out of your mind? The S&P's are at 660. That trend line right now is 2,400. If we were ever to catch back up to that, and look at what we've done, man. Okay? Where do you peak out at? The 2020 pullback. Where do you bounce at? All right? Maybe it just turns into support. And I'm not saying we're going back here, folks, all right? But you better believe that on a longer-term perspective, it put things in context of how far we've run and how quickly we've run. This market is up tenfold over a period of 16 years. Tenfold over a period of 16 years. That's almost a fold every year, okay, which is 100% of your initial. Nonetheless, that pops up. Pretty interesting how that matches up, right? And all I do, I take the first point in the chart, match it up to the first dramatic high I have, which is the 2000 dot-com bubble. And this is just the S&P, folks. Now, what's remarkable here on the pullbacks, okay, because the markets are just a representation of all of our psychologies, basically, right? Fear, greed, buying, selling, all of this stuff, all right? The market's like the best representation of that. Now, markets are driven by analytics. They're driven by probabilities. Probabilities, though, are driven by fear, greed, buying, selling, okay? And the pullbacks we've had during this period of time, as in the tenfold run-up we've had from 2009 to 2025, the only pullbacks, you had the taper tantrum, okay? You had the COVID pullback, which was real, right? There was real fear there for the first time in a long time. We didn't know what the world was going to look like. S&P's dropped from 3,400 down to about 2,100. You had people get hurt. You had people selling on fear, right? I mean, there's many situations, folks. My dad had seen people, they were selling their houses. Imagine, this was happening in St. Pete. You had people selling their houses, just worried about everything. They wanted to be in cash. What did they do with their cash? Oh, man, I hope they didn't stick it in long-term treasuries, right? Like Silicon Valley Bank. You take your money out of the market when it's collapsing, okay? You put it into fixed income at almost no interest returns. And meanwhile, the market goes to the moon and rates go way up, causing your capital on that fixed income to drop. But I say that there was very little fear, only in that you got all your money back within about 2 or 3 months. Now, you know, the Black Friday crash, all this stuff, there's always a rebound after these exacerbated pullbacks. But what makes the 2022 pullback less meaningful is you didn't even get back to the prior COVID levels. Okay, so this was the fear on the pullback. Your pullback in 2022, boy, it was harsh. Okay, you went from 4,800 down to 3,500. Well, folks, we would have killed for 3,500 18 months prior to that. Okay? And then the pullback for the tariffs, same exact deal, right? The pullback on the tariffs only got you back to the highs when this market was in euphoria heaven at the beginning of 2022. Well, at some point, folks, we need a pullback. At some point. It's just how markets work. You don't always get your money back in 3 months, right? That's all we've had happen. And yes, this one took how long? From lows to highs, about a year to get your money back, right? This one was like 5 months, okay? In 2002, if you take the bottom, and this is just the S&Ps, the NASDAQ is much more pronounced. It took you from 2003 to get back to 1540. Yeah, 4 years from the lows to get your money back for 2000. Then you had to do it again. Okay, then you had to go from 2009, another 3 or 4 years just to get back to where you were again. There's a lot of optimism in this market for pricing, folks. All right? And on a longer term trajectory, there's a lot of speculative natures going on in this market. Now, hey, as traders, it's good to see a little volatility. And the core of this market is strong with that magnificent 7. But guess what? Some of the multiples going on, you better believe it. And expectations sky high for NVIDIA coming into their earnings tomorrow. NVIDIA down about $3. We got the S&Ps off by 35. Markets in the red yet again. Cloudflare having some problems. Home Depot in the red. We're coming back for the opening bell, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got equities open. You got an S&P down by 33 points right now, off about 0.5%, 66.59. We had lows overnight at 66.35. NASDAQ 100, we're down by about 123, or 0.5% right now. 24,750. The Dow off by a full percentage. Home Depot weighing on the Dow this morning. We'll jump over to them in a moment. And you get the Russell off by 0.5% as well. You jump over to Home Depot. Down by 4.1%. A little bit of a pop on the open, but some tough numbers for Home Depot. You jump over to Lowe's. Trading lower on the Home Depot numbers. Off by 1.8% right now. And you jump over to Owl. So, Blue Owl Capital. Right? This is one of the companies doing big business with the AI build-out. And boy, you talk about getting pressure to the downside, folks. Look at this thing, man. Now, we'll pull up a couple of Blue Owl. This is one of the biggest movers, down by 2%, following the slide we had yesterday. No more getting out of their funds, folks. Yeah. The alternative asset manager restricted investors from redeeming capital from one of its oldest private credit funds. Private credit, no more getting your money back. Can't get that money back, right? Private credit, watch out, folks. Okay? Lowest level since December 2023. Restricting investors from redeeming the capital. Now, this is not a liquid investment, okay? Whether it's real estate, but investors in the non-traded fund won't be able to redeem their capital until the merger closes, okay? It's going to merge its $1.8 billion non-traded business development company, Blue Owl Capital Corporation 2, with its $17.6 billion publicly listed vehicle, Blue Owl Capital Corp. Investors that acquired vehicle will swap their holdings. That means they could see paper losses as much as 20% if the deal closes as the current share price. Yeah. And that's because the OBDC shares are trading at that much of a discount compared to the value of the fund's assets. Well, that doesn't make sense. Maybe the fund's assets aren't worth that much if that's what they're trading at, right? The proposed merger, this is how they put it, offers the strongest long-term outcome. Long-term. Does that mean there's a short-term problem? I know it's like cynical the way it's coming out, but you better watch out, man, when you're seeing, and Blue Owl Capital, okay? I mean, check it out. I'm going to post this one in the Tigers Den. This one I was reading over the weekend. Okay, when was this out? The 16th. Yeah, Sunday. When was I reading it? Sunday night? I must have been. I think I was reading this on the plane coming back Sunday night. Okay. Wall Street blows past bubble worries to supercharge AI spending frenzy. Okay. Now, I'll post this one in the Tigers Den, but I'm just going to pull one out for you. We're talking about numbers that are so large, even in the low cases, says Blue Owl co-founder Michael Lipschultz. Does it even matter if you keep counting after you get to $1 trillion of capital expenditure in the next couple of years? Well, the market might say it matters eventually, Michael. The Blue Owl duo, Wall Street superstars, built the firm into a $295 billion fund manager in 10 years by perfectly timing a surge in private lending. Well, they're not going to give you your money back right now because guess what? They can't. Yeah. But they're in there with Oracle. They're in there with OpenAI. They're your two co-founders right there. And yeah, that one was out Sunday night. The market paying attention a bit, and we're plunging. And now you got to wait for that merger to take place. But guess what? If that merger takes place, you're going to lose 20%. Then you can get your money back. Redemption requests in the non-traded fund surged last month, exceeding the preset limit. The firm chose to honor about $60 million in redemptions, or 6% of the vehicle. Well, now everybody wants their money back, right? The moment you can't get your money back, that's when everybody wants their money back. So we'll see. All right, we jump over to gold. There's your weekly on gold. We got a nice bounce last week with some volume, okay, on a weekly. And as I put out in the gold report, if you take a look at the daily, okay, that volume on a weekly basis, and it still matters, it's on the weekly, but on a shorter term perspective, the volume on that weekly really came in the selling on Thursday and Friday. Friday especially. Yesterday actually traded lower on lighter volume. We're bouncing from the overnight lows. We bounced at 39.97. Now, what's interesting is you jump over to Barrick. Okay. There's your acceleration on Barrick and Elliott. They're building a stake. Yeah, how about that? The miner could split into two different companies, is what they're saying for Elliott. Activist hedge fund Elliott Management built a large stake in Barrick. Elliott's stake puts it among the largest 10 investors in Barrick, and that means they have about $700 million in this equity. Now, this always comes to light after they build their position, folks, right? Okay. It's been quite a run-up. Elliott was encouraged by the idea that Barrick could split into two companies, separating its high-growth North American operations from its mines in riskier regions across Asia and Africa. And their board, Barrick's board, recently discussed separating the two parts of the business, as well as outright sales of its African and Pakistan assets, Reuters reported last week. And that would unravel the modern-day Barrick that was created in 2019 in an all-stock acquisition of Rand Gold. And you have Mark Bristow, who's been running that company. And yeah, he had stepped down in September. You had another one as well. And he's been a great CEO for a long time. But nonetheless, you got Barrick. Elliott, they got $76 billion under management. It seems like they've taken a decent chunk and put it into Barrick. Barrick's up 2.5% on that news. And yeah, you talk about quite an acceleration on Barrick. Now, last week they had great numbers, okay? But check out how you broke these highs on lighter volume. All right, the week of September 22nd, you do 163 million shares. You do 153 million shares the next week. You break above those areas on 115 million. And that's not even taking the week that you accelerated. These first 2 weeks that you got up there, you take a look at the daily on Barrick. Okay. Look at the volume you had on September 22nd. All right, it was a 2-day move from 30 up to 36, massive volume. You get some selling. But we're getting above that area on volume that does not compare to those huge days when you originally got up to that level. Jump over to MicroStrategy. Catching a bid off the lows. Yeah, down to 187 last night as Bitcoin was cascading below 90,000. You're at 200, up by 2.7% today. We'll talk a little bit more MicroStrategy when we come back. As their euro preferred shares, 80 cents on the dollar. 80 cents on the euro. Excuse me. We'll come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Markets in the red, jumping around. S&P's off by 35 points right now. The NASDAQ 100 off by 195. And we jump around to Cloudflare. NET, not a bad ticker symbol. Holding up pretty well considering what's going on the internet today. Down by 2.6%. You were as low as 186. You're at 197 right now. We take a longer term look at this equity. Quite an acceleration. From lows in April of 88 up to 260. You take a longer term look at this thing. You ran up in 2021 to 226. We're actually below that level now. Remarkable. Put this thing on a daily. Boy, some gangbuster numbers for them at the end of October. You do it on volume. And yeah, we're going to have some volume today. It's 13 minutes into the trading day, and we've already done 2.7 million shares for this equity, which is a big one. All right, let's talk a little bit of valuations. Why not? And who's out there saying that these equities are overpriced? They're just calling them neutral. But Microsoft and Amazon downgraded as Redburn breaks with the peers. But yeah, Rothschild and Company, Redburn's Alexander Haisi downgraded Microsoft and Amazon to neutral, citing the industry's trust us. Gen AI is like early Cloud 1.0 narrative, increasingly misplaced. They're going to have to make the money somewhere, folks. So they initiated coverage June 2022. Both those equities a little bit low at the market this morning. 90% of analysts have buy equivalent recommendations on them right now. And again, this is Microsoft and Amazon. Oof. Been quite a run-up for these two equities, of course. And their coverage is just, this person's coverage is just three other equities. Sell rating in Oracle, Snowflake, and neutral rating on MongoDB. They're going to have to make up the money somewhere. They cut the Microsoft's price target to 500 from 560 and maintain Amazon at 250. Nice round numbers, right? Microsoft, 500. Amazon, 250. Jump around. Amazon off by 2.1% today. Not necessarily on that news, but they do get downgrades. Microsoft shares down by 2%. We check in on Home Depot, down by 3.3%. A little bit of a lift on the open. We check in on Bitcoin right now. 91,500. Watch out for that 90,000 mark. All right, we check out yields. 4.09 on the 10-year. A little bit lower yield. Dollar right now, 99.49. And gold with a nice little bounce as you get a little bit of a pullback in the dollar. Gold right now up by $1. $80 from the lows, though. You talk about a two-way move, man. Check out NVIDIA this morning ahead of their earnings. Down another 2%. $100 billion in market cap wiped out. And today it feels like nothing. That's how much equity market cap is in this equity, man. Let's take a look at the volume on NVIDIA as we come into their numbers. You got volume at the highs on a weekly. You got it. I mean, look at that weekly volume on October 27th. Right? This is not a situation that the volume's just dried up. Okay, yeah, you had massive volume in the beginning of 2024. But this recent run up, especially October 27th, we had some big volume there making those highs. You check out the daily, and there was your volume spike. 2 days of it, right? October 28th, October 29th, the $5 trillion run. Right? It actually occurred a little bit prior to that. No, that was the day. Excuse me. Yeah. $5 trillion run. You get all the volume, all the volatility. And boy, we rang the 5 trillion mark, which is the only thing that's a little bit worrisome. You get up, fail to break the highs. You're buying at the lows. And we'll see as we're coming into earnings. Now you take a look at the move. It's about a $12 or $13 move for their earnings Wednesday after the bell in either direction. So you buy a at the money put or a call, you're looking at about $7. Not that much volatility when you take a look at the fact that any given day you're trading $5 to $6, right? Meanwhile, in earnings, you got a $12 move. And here we go. They're selling it again, folks. We got overnight lows, 24,603. We're coming down to test that area right now in the NASDAQ. S&Ps, you're about 13 points from that price level. You check out the Dow, off about 0.8% right now. We check out the heat map. You pull up the Dow. Yeah, Amazon down, NVIDIA, Microsoft. On the flip side of that, you got Apple in the positive, Walmart, Procter & Gamble, Coca-Cola. Yeah, it's happening again. We got a little rotation going on right now. You check out the S&Ps. Consumer staples, no problem today. Okay, tech stocks, not happening. AMD, 3.2. Micron, 3%. Microsoft, 2%. AppLovin, slightly in the red. Google shares off 0.5%. Amazon and Tesla in the red as well. Home Depot weighing on the market down 3.3. But no, not consumer staples. Check it out. Walmart in the green. Coca-Cola, Pepsi, Procter & Gamble, Costco, Target, Dollar General. All right, let's jump around to some of these retails. Walmart shares give up those gains as we speak, but holding up well. Jump over to TJX. If you're watching this equity, folks, TJX, put it back to a weekly. Towards the upper boundary right now, but boy, great channel line for TJX, up 0.2% today. On the flip side of that, Kohl's, but Kohl's has found a bid recently. All right, look at the longer term chart of this thing. Breaking out of that channel from $6 up to, what did we just make a high? $18.75. You go longer term, though? Yeah, not exactly enthralling. We're coming back into the lows of 2023. The low there, 1789, 1768. You get some nice volume in July. Now, that was meme mania. And look at the volume, though, on a monthly basis. Let's zoom in. Look at the volume drop off, all right? Not even comparing it to the meme mania. Look at the volume on the selling, right? Monthly, this is. Bigger term picture for Kohl's. 303 million, 277 million. What are we rising on? 190 million. September was 120 million. October was 97 million. All right, and I'll tell you, folks, there's a nice mall in Lakeland, and they have a Kohl's. And now what they have is they have a Nordstrom rack, okay? And I always said when I went into Kohl's, I felt like I was paying Macy's prices for almost a Marshall's experience, right? Like I felt like I should be getting a deal when I go into a Kohl's. Meanwhile, I'm paying Nike prices. Now they got a Nordstrom Rack competing. I'll probably never go. I love Nordstrom Rack. I was in there a couple weeks ago. Probably will never go into that Kohl's again. I went in there occasionally. No, I'll go into the Nordstrom Rack now. They got a problem, Kohl's. I don't think they know where they sit in terms of what is their purpose. Are they high end? Are they low end? What consumer are they reaching? We're coming back, folks. We'll take a look at more equities. Markets accelerating in the red. One more segment. Come on back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&Ps continuing to slide. We're coming right into those overnight lows, and we just broke them. 66.31.25. We're trading at 66.35 right now. NASDAQ 100, we're off by 300 points. Dow off by 450. Russell holding up pretty well, off by 0.3%. We jump around to the stocks driving this market lower. NVIDIA off by 3% right now. Amazon 2.7%. Microsoft 2.5%. Google only 1%, but yeah, that thing just traded down $10 from where we were yesterday. Tesla 2.7, Meta 2.5, Blue Owl Capital off 0.6% right now, and yeah, checking out Kohl's. So Lakeside Village was the mall that I was thinking about, folks. Lakeside Village, And what's remarkable here, so JWN is Nordstrom, but the reason why it ticks across with no activity, if you put it on here, is that they're getting taken private. And this thing, $6.25 billion, I believe is the number. Now, I don't know what's going on. I got to pull this up. Maybe somebody, is this still public? How is this? Because the Nordstrom family is going to go private at $6.25 billion. So, is this thing? No, it's not still trading. Yeah, that's May. Okay, so it stops trading in May. So they take it private, which is what I thought. Okay, so you can't even buy Nordstrom right now. The Nordstroms, the family, they take it private at $6.25 billion. Okay, and I'll tell you, folks, when I saw this Nordstrom's open, now this Nordstrom's been open for 3 weeks at Lakeside Village. It's a brand new store, brand new everything. And it's like the best place in the mall, and this mall is enormous in Lakeside Village. And I said to myself, you know what? Nordstrom sees it, man. They're coming. There's so much area for growth for a company like Nordstrom Rack, and Kohl's is, I don't know where they fit. As I said, hey, this market, keep your spikes up, folks. It's a two-way market. There'll always be another trade, all right? Keep your stops in there. Get a price level, and we got action, folks. S&P's off by 1%, NASDAQ off by 336. Basil Chapman's up next, folks. Steve Rhodes at 11. Larry Pesavento at 1. I'll see you at 3 o'clock. Have a great Tuesday, everybody.